we have now with us Sharmila Joshi, who is Head of Equity at Peerless Securities, joining us on the show. Sharmila, to begin with, earnings season for the third quarter kicks off today. How are you expecting numbers to turn out?
I think the main number that I'm waiting for today is obviously IndusInd Bank. We've seen a very good performance from the bank in the last many quarters, and I would expect that that would continue. But I think a lot of the positive is now in the price. So I think from a market price point of view, perhaps the result may not do much. But yes, I think that 25% kind of growth that they've been showing, I would expect that to continue. I think the next big round of numbers is really on Friday, and I think that would be the big event to watch for when Infosys really kicks off with numbers on the 11th.
So Sharmila, to just dwell on that point, because there is a general consensus that the four big boys from the IT pack are going to report a fairly subdued performance this quarter compared to last year on account of the weakness in demand, the lower business volumes as well. What are your expectations?
Absolutely. I think that in any case, the third quarter is typically is the weakest of the quarters because of the holidays, etc. And I think yes, given the fact that we've seen a subdued environment in the US, you would expect numbers to be not really, nothing really great to look forward to. But I think two things have changed for IT in the interim. I think one has been the Gartner report, on the back of which we saw a lot, some amount of buying coming into the IT space after a long time, when they spoke of a growth of 4.2%. And I think last week we also heard from the Infosys management, which seemed to indicate that 2013 for them could be a better year than 2012. And I think I've heard a positive statement from Infosys after a fairly long time. So I think that the outlook that they give on market. Also, I think January is also the time when they typically begin to hear of how the budgets in the US are beginning to shape up and how corporates there are looking at the year going ahead. So we could get a some flavor of that in the kind of commentary that they give, and I think that would really be what I would really wait to see in the numbers rather than the numbers themselves, because as you pointed out, those are not going to be really anything to write home about.
Sharmila, how about Tata Motors? You've seen that stock hit a new high today.
Yes, absolutely, and that again, Tata Motors, of course, I think the kind of buy reports that you've seen are really talking of the global story that's beginning to play out for Tata Motors. So I think when you now get to see slightly disappointing sales numbers from Tata Motors domestically, which we did last week, we need to take that with a pinch of salt, because I think that portion of their portfolio is now smaller as compared to when you look at the larger picture for Tata Motors. So yes, I think this upgrade that for Tata Motors also comes at a time, and even for Maruti for that matter, we've had a couple of upgrades. To my mind, from a domestic viewpoint, they're coming at a strange time, because the Maruti management, for instance, has really been given quite a subdued outlook for the year going ahead, where they said that growth is likely to be in the single digits, 6-7%. They didn't sound very encouraging about diesel cars. So against that backdrop, it seems a little it's quite strange, and at the price point at which Maruti, for instance, is, to get a buy report. For Tata Motors, as I said, I think it's really more the global play that's prompting the buy reports. But even then, I think that so far so good. I mean, you've seen the stock hit 330. I think maybe another 4-5% if we get to see these kind of good markets. But otherwise, I think you should see the stock trade in this range going ahead.
Sharmila, which brings me to a question on the broader sense of the market. While everyone is maintaining a fairly bullish stance, the fundamentals of the market haven't really changed. It's weak economic growth, which is what we're expecting. Earnings aren't supposed to be great, and the rupee is also going to weigh down. What's your view?
Oh, absolutely, I think. But none of these, all these were known even before really the market rally started, and it has been liquidity driven. And I think some amount of the rally has been with the expectation that you could see a rate cut on Jan 29. So we've seen that build up of buying coming into banks, etc. But I think what has happened, what has changed perhaps in the last couple of days, is that we've seen good amount of selling from the domestic funds, which is a little worrying, because they have been sellers throughout, but the kind of volume of selling that you saw went up significantly yesterday, for instance. So either they want to be more liquid, or you're seeing a big round of redemptions coming their way. So, or maybe a combination of the two. So you've seen a big sell-off coming from the domestic mutual funds, and you've seen even profit booking otherwise, where the sense is that it's better to wait and watch at this junction. So I think markets are poised very delicately because of that, and I think that if you were to, for instance, correct below 5950, then you could slip back into that range that we were in for the longest time. So my sense is that it's best to stay on the sidelines for a bit, go with the news if there is any, and wait for really Nifty to cross 6030 before you can say that this uptrend is kind of continued. So I don't think it's the macros that's weighing down on the market as much as the fact that just the level that you're at is making people a little cautious and bringing some amount of profit booking and selling, especially from the domestic funds.
Yeah, Sharmila, stay on. Let's just address some news on Reliance Industries, and the CAG's second round of audit of the KG D6 gas block is slated to start today. The CAG had, in its first round of the audit of the KG D6 block, begun on the premise of doing a financial audit, but the report tabled in Parliament last year stated that the auditor had conducted a performance audit. So, Sharmila, just a little away from that, and view on the Reliance stock, where do you see it headed?
Up, I think, really, because I think if I were to think that markets are heading higher, I would assume that Reliance has to play, some part in that rally, and it really hasn't participated so far. So, in fact, the entire oil and gas space. So, we've seen some amount of participation coming in when you heard of the diesel price hike and etc. But just given the sheer weightage that Reliance has in the Nifty, I would expect more participation coming from there. So yes, I think it's possibly all these developments that you were referring to with the audit, etc., that are also holding back the stock. After it moved up a couple of percent from that 820, 830 level that it used to be at. So you would wait for clarity on that. But really, I think if you were to realistically see Nifty anywhere at the 6,100, 200 level that market is expecting, then I think Reliance has to move up.
What would you advise investors to buy into in terms of specific stocks for the rest of the year?
For the rest of the year.
As a long-term target.
That's a long call. But I think banking and the infra space would be areas to look at, largely because, going forward, perhaps they would benefit from the interest rate cycle peaking out and coming down, interest rates coming down over the remaining part of the year. And of course, I think for that to show in the results will take a couple of quarters. But I think that, given the fact that we are talking of long term and the fact that markets start discounting these things way before they happen, perhaps in the next 3-4 months, if we do see that interest rate cut coming in, then market will start looking at all these plays more favorably.
All right, Sharmila Joshi, thanks very much for joining us on the show, talking to us about all of those stocks and also the outlook for the equity markets.